I just want to take a quick look at crude oil. Okay, now we've got an interesting reversal here for those people who like reversal trades. I know a slim minority of you do. However, this week here, there's closing on crude oil as a bullish pin bar reversal, which correlates with the level $40 a barrel. Now, what is interesting about this is if we fire long here, bearing in mind this is potentially a ring low opportunity to buy. It corresponds with a level here. Let me draw that one in. And we had a 50% retracement from the all-time low, sorry, from the very low. There we go, $40. We've seen a decent level right here. And if we take a look, we can see that this could potentially be viewed as a head and shoulders formation. Look at it. It looks very, very, very handsome in terms of a bullish reversal pattern. So you've got the left-hand shoulder here, the head, and the right-hand shoulder. And what is more of this one here, crude oil, is the fact that we've got a 50% Fibonacci retracement, which is typically the retracement you get prior to an extension. We could see this continue as an ABCD formation. And if that happens, then that's going to, let's draw A to B equals C to D. Typically, we've got symmetry. Okay, so we've got A, B, C, D. It's a free wave formation. So let's copy this one and see where the projection would be. There we go. Let's move that down here. That kind of makes sense because it really completes within the $60 a barrel territory, which is a level up here. I'm only expected to break above this point here. However, we've got some upside potential gain here if we did decide to take this one as a ring low opportunity long. As Julian said a few months ago, he would expect oil to faff around for a bit longer before potentially continuing down, rather than a strict continuation to the downside. We've seen the double bottom here. We rode it all the way up to quite recently, up to this point here. And then we cashed out our profits, and now we've seen the retracement, and now we could potentially go in long again. We've got the level, we've got a 50% retracement. What is the smaller time frame saying? Let's have a look on the hourly or 4 hourly. Let's have a look at the 4 hourly, as this is on the weekly time frame. Okay, so we've broken above this dynamic level of resistance in the form of the 20 moving average. You've got the higher low here on the 4 hourly. Could this give us a point of acceleration? Let's draw down to the 60 minute and see what that's saying as well. Yeah, we've broken into an upward trend, or short-term upward trend on the hourly. Let's have a look on the daily. Remember that the smaller time frames are the bigger cogs in the wheel. Sorry, the smaller cogs in the wheel turning the bigger wheels. Okay, and that's important. Okay, so we've got a sharp rejection of this level with oil, certainly on the daily. But let's have a look. Let's go back to the weekly. What is interesting about this one is if we decided to trade it with our entry above the high of this week's close, like right about here, if our stop was below the low, we've got roughly a roughly a 3 to 1 before the previous swing high. That's good enough. Also, if we did place our order above the high around about here, then if we're triggered into the trade, that's a significant event because we can see that the highs of the previous 1, 2, 3, 4, 5, 6 weeks has not been breached. So if it's breached next week, if this week's high is breached next week, that would be a significant event in itself. Okay, and this could be seen as a simple flag or retracement prior to an extended leg. If we visit our friends at Equity Clock, and we're frequent patrons of this site, or visitors of this site, should we say, traditionally, crude oil futures have been bullish in August, September, until they turn around about October, November. So could this represent the last hurrah for oil before a potential bounce at this level and a move to the reversion back to the mean, back into the range, or indeed the continuation of the protracted downward trend? Well, the reward to risk is certainly there to speculate one way or the other. Okay, so on one hand, we've got seasonality, we've got the technical factors pointing to a reversal long. Remember that reversal trades are far less likely in coming through than trend-based trades, so I just want to throw that caveat into the mix, and it's entirely up to you whether you like the look of trading it or not. So in plain sight, it looks like a bullish reversal pattern, rejecting this soft level of support, bullish reversal pattern, bullish signal bar in the form of a bullish pin bar reversal, 50% retracement, and yeah, the high of the previous 1, 2, 3, 4, 5, 6 bars has not been breached. And if it does this time round, then we could be in for a 3-to-1 trade if price does push to the previous high.